Hello there, this is Bruce. It's Saturday, the 6th of January, 2024. Going to take a quick look at the market, what the technicals are telling us happened last week, and what we expect going forward. I'm also going to introduce you to a little bit on volume analysis and how we use volume in our decision making and why it's such a critical component. And show you a new scheduler that I'm using. So let's just jump in. Video presentations intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I'm always available, Bruce at Fleet Capital Management. Homepage of our website. Two buttons. This one on the bottom will take you to our most recent market commentary videos. And I've made a change. I've updated my scheduler, which I want to show you. But you would just click on this button if you ever need to schedule anything with me. Let me take you to that new scheduler. The new scheduler, when you click on it, it's going to look like this, to where you can choose the type of meeting or communication that you would like to schedule. Let's say we just need to do, you wanted to do a phone call. You didn't even want to do a video call. You can schedule right here, phone call with Bruce. Let's say you wanted to schedule a Zoom call, but it wasn't specifically about your risk assessment or portfolio. It wasn't a portfolio review. It wasn't an overview of Blue Leaf or an initial. You just have stuff you want to talk about. Just schedule it right here. This is a general conversation, but via Zoom. And then if you ever refer a client to me, you can have them go right here to our page and click on to schedule an initial conversation. And then, of course, this is a risk assessment and portfolio construction. This generally follows if someone becomes a client, then this is the next meeting we do. Once you're a client, we do portfolio reviews and maybe an overview of Blue Leaf. So anyway, I hope this is a little better. If you have any suggestions for anything else you'd like to see on here, let me know. Okay, volume. Volume is the footprint of institutional investors. Now, when I say institutional investors, I'm not talking about our firm. We manage tens of millions of dollars. I'm talking about the companies that manage sometimes hundreds of millions and billions of dollars. Those are state pension funds, huge mutual funds, huge hedge funds, massive insurance companies, and so on. So how do we know what they're doing? Because they represent about 80% of the volume in the market. And if you don't think that there's manipulation of price, well, I hate to break it to you, there is. These institutions do a lot of manipulation of price, which they can hide. But what they can't hide is their volume. And that's why we call it the footprint. We can kind of see what institutions are doing. One first introduction into volume that I'll show you, let me grab a little pen here. This is my stock list of from Friday, from yesterday. And let's just look at one stock. Here's Microsoft. On Friday, the price was down 0.5%. But also the volume change was down big. That's not the best example. So well, Builder was actually up 1.5%. And you might think, well, that's really good, but their volume was down. So what that tells me is this push to the upside in price, while we love it and we want it, it wasn't really supported by large institutions. And you can see that across the board. If we have a percent rise in price, but with lower volume, that doesn't excite me at all. If we have down volume, here's a great example. Front Door was down 1.43%, but their volume was down 43%. That doesn't scare me. It's kind of meaningless. Now, if they were down 1.5% and their volume was up 43%, that tells me that institutions are selling it. Here, it tells me that more retail is selling it. So the only one that looks really bad to me is NetEase, our problem child, was down 4.88% on Friday, and their volume was up 43%. NetEase is an interesting story because the fundamentals on NetEase are still really good. Zacks research has it as a buy. But this got hurt with a Chinese regulation that came in against gaming companies. They're trying to stem the amount of time the Chinese population is spending online gaming. And so that's what really hurt this, not their fundamentals, but the technicals aren't good, and this stock is probably leaving our portfolio very soon. So I just wanted to tell you, this is one of the things that is really important. You know, if the market is down one day, let's say it's down a couple of percent, but in my afternoon email, I say, but it was on light volume. What I'm trying to convey is it's not something to be scared of, because it's not that institutions were dumping shares. So there's just an introduction, but we will continue talking about volume as I teach you a little bit more about how we use volume. Let's go to our matrix, which we update every day. This was updated on Friday. Pretty much everything in the green, we're in the hold on this new Lux coloring, and I'll show you that on the chart. But everything else is really looking good. Everything looks fine. The VIX, which is the volatility or fear index, has risen from 1245 to 1334, and I think all 5 days or all 4 days of this first week of the new year, the markets were down. So that makes sense. When the VIX goes up, markets tend to go down, but the key thresholds are the 20 level. If this keeps rising and gets up to 18 to 20-ish, especially the 20 level, that is a very early indication that there's some fear in the market and the market's going down. But this is not a bear market indicator. This is a very, very short-term indicator. Our bear market indicators clearly, go back to my little drawing tool, these are what we really focus on. And more importantly, this one is what we focus on, but both of them. And they are purely in the green. So as long as those are in the green, you know, we suggest that the market is fine and healthy and might just be having a pullback. Remember that these two columns are based on weekly information, and weekly information is actually more important than daily information. But daily gives us a clue that something might be happening. This is kind of early warning. That's why we use these daily indicators. That's early warning. And then this is our second warning. And then these are our bear market indicators. Okay, I hope that makes some sense. So let me shrink that down and get rid of that. And let's go over to our charting software. Here's the S&P on a daily basis. And you can see that this candle coloring is now purple. And that's what gave us, whoops, I just closed it. So let me open this back up. That's what gave us these purple hold colorings. That's where it came from. And just to remind you, purple means either consolidation or transition. So here we were in a bullish phase, and then we kind of went sideways. That's a consolidation, normal. Then we had a bullish phase, then we had a very short consolidation, normal. We had a bullish phase. This looks less like a consolidation because look at how it's starting to slope down. Then it turned into a little negative phase, and then a positive, and then a consolidation, and then it dropped again. So what purple means is either it's a consolidating market, which is healthy in an uptrend, or it's a transition from a bit of a downtrend, purple, to an uptrend. Now we're in purple again. But we don't know yet if this is a consolidation or if it is a transition. One of the ways we figure that out, and to grab my little marker again, you can see that, pardon me one second, you can see that this 8-day moving average, which is the white, is still above the 21-day. If that were to cross below the 21-day, that is what we call a pullback. And pullbacks are pretty frequent. They happen in uptrends and in downtrends, but let's just talk about uptrends. But that's just a pullback. It's a rest. It's a little bit more of a rest in the market than maybe a consolidation, which is a different type of the market resting. But we're not even in a pullback yet, which is our first level, the least destructive level. We're not even in a pullback yet. And then if the 21 goes below the 50, that is a correction. And then the third level is if the 50 crosses below the 200, that's a bear market. So we're not even on a pullback. So when I say that I am not worried yet, it's just not showing me anything negative as far as the health of the market. It certainly continues to look very healthy to me. And one other reminder, let's go back to the Fibonacci analysis. This was the most recent swing low. Whoops, where did my Fibonacci go? There we go. This was our most recent swing low. And here is our most recent swing high right there. And we have seen the market roll over a little bit. And I already showed you how we're not even in a pullback yet, technically speaking. But based on Fibonacci retracements, here's the 50% level, meaning if price came down to this level, that would be 50% that it retraced of this last run. Okay, and 61.8 is 61.8% is another powerful, this is called the golden ratio. This is a very powerful Fibonacci number. And so if the market came down, grab my little pen once again. If the market came down, oops, bear with me one sec. I'm sorry. I probably need to get better at this. But if the market comes down to the 50% level and then bounces back up, that's called a continuation of this bullish trend. That would still be considered normal. If it were to come down to the 61.8 level and then turn, that's still considered a normal continuation of this trend. If it were to go down below that and continue to fall, that means this trend is over, and we're in a brand new downtrend. Now, I don't wait for that, but this is a part of technical analysis to help us understand if pullbacks are normal. That's all that is. And right now, I don't see anything at all that is abnormal. I don't even see a pullback yet. So that's just something I wanted to show you. Also, continuing on the topic of volume, I'm going to actually turn these indicators off for a second. I'm going to raise this up a little bit. This is a new indicator that I have on my chart. Don't worry about those bands. Those are something completely separate. But what we're looking at is just general volume. And when you see the volume or the green, it will always be green. If it's above that center line, that means the majority of volume coming into the market right here is bullish. And you can see we had some bullish activity and we have increasing day to day over day is increasing volume. That's very healthy. If you can see that little green line right there, it's kind of hard to see. That's called volume threshold. And that's the area the volume we need to get at to be extremely strong. So you can see right here, the volume met its volume threshold, and that's based on past occurrences. And we, again, had a very strong run-up in the S&P 500. What this white or lighter shade is this is considered excessive volume. It's over the threshold. It's excessive to what is normal for a stock. Generally speaking, the way this is interpreted is this is institutions coming into the market, and this is retail rushing into the market, and they're usually late. And right when that falls off, you can see my vertical line. That usually marks a short-term top, and it certainly did. It worked to the penny right here. But we still have very significant volume. Volume has come down, like I showed you, and you want to see that when the market's going down. Let that volume start to dry up and dissipate when stocks are going down. When the stock market turns back up, it will probably be because the volume turned back up. So these are all just little clues that we use in analysis. Here, this price was purple and above its ATR, but look how the volume was increasing to the downside. So would we ever want to buy that? No, we would never buy the S&P or any security, and I do this on every security, if the majority of the volume is falling, even though this kind of looks like a consolidation that could continue up. Remember, little uptrend, consolidation, we don't know which way it's going to go. oh, but we have a clue. A clue is it's probably going to go to the downside because we've got downside volume overwhelming upside. In every day, there's up volume and down volume every day. But what we want to know is who's winning, the down volume or the up volume. And that's what this shows us. And this is a really great example of, I wouldn't buy this here, even if that 8-day crossed above that 50. If other things were telling me that this market should go up, but I'm seeing negative volume, I'm not a buyer. So all these pieces of analysis, and there's so many pieces to analysis, they give us clues. And that's what we need to look at. If we go to the QQQ, same thing. This one is a little closer, actually, to a pullback. If you look here, that 8 is about to cross, may cross the 21. That would be considered a pullback. But we also look at, it's kind of sitting at that red line, which is the center point of the linear regression. So that's the mean. That's fine, not worried about it. It certainly hasn't come down to the 50, which I would expect. So again, and we still have up volume. We still have up volume. We did have a little excess volume, and right when that stopped, the market started to retrace a little bit. So I'm just trying to show you that there are clues, and volume is a clue, and one way that we start to watch what are the institutional traders doing. And that is just another clue that we use. I'll put my other indicators back on. It's just another clue that we use to say, okay, what's going on here? So that's volume. I'm going to be telling you a little bit more about volume in our weekly market analysis, because I want you to understand the clues. And then I'll go over some of these other indicators and explain to you how we use them as clues. Going to our worst stock, we've got so many great stocks, but going to our worst stock, NetEase. The hard thing with this stock is that Zacks ranks it a buy. The analysts are maintaining their buys. There are a lot of good things happening with this stock. It did drop down, but right to that purple line, which was its most recent very low point, and bounced off of it. That was a good sign. It has rolled over again, but it's still above its ATR, which is its average true range. But I have to tell you, I'm seeing this negative volume continue to the downside, and this is one of the reasons I wanted to explain it to you. I'm giving this stock maybe 1 or 2%, probably somewhere in this area. I'm going to put in a fixed stop, and if it breaks that, we're just going to get out of it. If things change, we can always go back into it, but I'm not going to let this sit around forever, because it's just not performing. And there's 1 or 2 stocks in our portfolio that I'm thinking of getting rid of, because we've got so many winners. If I go over to our stock portfolio, and this is current, here are the stocks, the individual stocks that we own, and I have them organized by highest percent gain to lowest percent gain. And you can see we've got a lot of really powerful gains in there. So we're going to start to clean up some of this stuff, not Microsoft, not SMCI, but probably I'm taking a really close look at these 3. They're just not doing what I want. But, this one happens to be a strong buy. This one's a hold, and this is a moderate buy. So no one's saying to sell these stocks as far as the Wall Street analysts, but they're not of the quality and performance that I am comfortable with. So I'm not going to just sit around and wait anymore. Okay. So that's what I wanted to show you. I know I went through it quick, as I always do, but if you have any questions, just let me know. And once again, you can always go on to my website and my updated scheduler, and for anything that you need, you can always send me an email. But if you just need a quick phone call and you want to schedule it, you don't want to just take a shot to see if I'm available, you can schedule it right here, or a Zoom call or anything else. So that's really the story. I have gotten a few very, very good questions about Bitcoin since last week's video. And I believe I've answered those questions one-on-one. If you have any additional questions about Bitcoin, again, Bitcoin is a high risk proposition, but there are a lot of reasons that Bitcoin could do very well in the near future. But again, it's high risk. So I'm leaving it up to you if you want to talk to me about it, or talk about anything else. So just feel free to jump on my calendar at any time. And if you do have someone who would like to find out about the type of work we do, it's best if they would click right here, well, excuse me, down here, initial conversation, and I'm more than happy to talk about that. And the last thing I want to say is, when you refer a client or a friend or a family member, I just want you to know how much I appreciate that. It's showing trust and value in the work that we do every day. But I also want you to know that not every referral becomes a client. There are some times where it's just not a good fit for the client or for our firm. And we're very open with people that we talk to, because I really believe that if you don't have a good connection and trust and shared vision of what we're looking for in the market, then that relationship's never going to be happy on either side. So I appreciate when you send me referrals. Not every referral is a good fit. And like I said, it just might not be a good fit for that person. So but I do appreciate it. So that's all I'll say about that. If you have any questions, if you need me for anything, I'm always here. And I hope you have a wonderful, wonderful weekend. And we will be back at this on Monday morning, nice and early Monday morning. Talk to you soon. Bye-bye.